The market has been on a wild ride lately. Investors are nervous. We've seen some big drops. Is this the start of something bigger? Is a crash coming in 2025? These are scary questions. Nobody has a crystal ball. But we can look at the facts. We can examine the indicators, and we can learn from history. Right now, there are reasons to be cautious. But there are also reasons to be optimistic. The market is a powerful force. It can create wealth over time. Understanding the risks and opportunities is crucial. Let's dive in. Several indicators are flashing warning signs. One is inflation. It's stickier than expected. That means the Fed might keep raising rates. Higher rates can hurt stocks. Another concern is the yield curve. It's inverted. That means short-term rates are higher than long-term rates. This has often preceded recessions. We're also seeing geopolitical tensions. The war in Ukraine continues. Trade disputes are flaring up. These events create uncertainty. Uncertainty makes investors nervous. Finally, consumer debt is rising. People are borrowing more to make ends meet. That's not sustainable. It could lead to a pullback in spending. The economy is sending mixed signals. On the one hand, unemployment is low. People are spending money. That's good for stocks. But there are also signs of weakness. Manufacturing is slowing. Business investment is down. The housing market is cooling. The Federal Reserve is in a tough spot. They need to fight inflation, but they don't want to cause a recession. Their actions will have a big impact on the market. One thing is for sure, volatility is here to stay. We're likely to see more ups and downs in the coming months. The world is a messy place right now. The war in Ukraine is a humanitarian crisis. It's also causing economic turmoil. We're seeing rising energy prices, supply chains are disrupted, inflation is a global problem. On top of that, we have trade tensions. The US and China are locked in a battle for economic dominance. Tariffs are hurting businesses and consumers. These global tensions are adding fuel to the fire. They're making the market more volatile, and they're increasing the risk of a downturn. Section 5. Expert opinions, navigating the storm. So, what do the experts think? Are we headed for a crash? The truth is, nobody knows for sure. Some analysts are predicting a sharp downturn. They point to the warning signs we've discussed. Others are more optimistic. They believe the economy is still strong. What's an investor to do? The key is to stay calm and focus on the long term. Don't panic sell, but don't be afraid to take some profits. This is a good time to review your portfolio. Make sure you're diversified. Consider adding some defensive positions, and have a plan for what you'll do if the market does crash. Section 6. History as our guide. Lessons from the past. The market has seen its share of crashes over the years: the Great Depression, the dot-com bubble, the financial crisis of 2008. Each of these events was painful, but the market always recovered. In fact, some of the best buying opportunities came after crashes. The key is to learn from history. Don't panic, don't try to time the market, and don't put all your eggs in one basket. Instead, focus on building a diversified portfolio of quality companies. Hold for the long term and ride out the storm. Section 7. Strategies for the wary investor. If you're worried about a crash, there are steps you can take. One is to increase your cash position. This will give you more flexibility to buy if the market drops. Another strategy is to focus on defensive sectors. These are industries that tend to hold up well during downturns. Examples include healthcare, consumer staples, and utilities. You can also consider alternative investments. These are assets that are not correlated with the stock market. Examples include gold, real estate, and private equity. The key is to find investments that align with your risk tolerance and time horizon. Section 8. Long-term outlook, weathering the storm. It's important to remember that the stock market is cyclical. There will be ups and downs, but over the long term, the market tends to go up. The key is to stay invested. Don't let fear keep you on the sidelines. If you're patient and disciplined, you can weather the storms and come out ahead. Remember, investing is a marathon, not a sprint. Focus on the long term, and don't let the noise of the market distract you from your goals. Section 9 conclusion: stay calm and invest on. So is a stock market crash coming in 2025? Maybe, maybe not. Nobody knows for sure. But here's what we do know. The market is unpredictable. There will always be risks. But there will also be opportunities. The key is to stay informed, be prepared, and most importantly, stay calm. If you do that, you'll be well positioned to navigate whatever the market throws your way.